If you're anywhere near the crypto space, you have definitely felt it. It's like a seismic shockwave just ripped through the entire market, erasing billions of dollars and leaving pretty much everyone asking the same question. What on earth just happened? So today, we're going to break it all down. The great crypto crash of 2025, from that very first tremor to the aftershocks we're still feeling right now.
So let's just start with this one. Staggering number, 95%. That is the percentage of the top 500 altcoins that are currently in the red. Look, this is not just a little dip, it's not just a correction. For the altcoin market, analysts are literally calling this a historical capitulation zone. The pain is absolutely widespread, and believe me, it is deep.
And this is the price tag of that pain. In just 24 hours, $19 billion. Just gone, liquidated. And you know, those aren't just numbers on a screen. That's the positions of over 1.6 million individual traders completely wiped out in a single day. The scale of it is just, it's almost hard to wrap your head around.
And this number right here, 18, that's where the Crypto Fear and Greed Index is sitting right now. And just so you know, anything below 25 means extreme fear. So this isn't just people being a little cautious, this is outright, full-blown panic gripping the market. It's the lowest we've seen this thing in months. And right now, that fear is driving way more decisions than any kind of fundamentals.
Okay, so let's build on all that. In our first section here, we're diving right into the heart of the storm. We're going to really try and understand the sheer scale of this market freefall.
You know, it really all starts with the king, Bitcoin. Its dramatic 23% slide from that recent high of over $126,000, well, that's the main driver here. The second it broke below that massive psychological and technical support level of $100,000, it was like a dam just burst, unleashing this flood of selling across the entire ecosystem.
Now this slide, this tells a really important story about who's hurting the most. Take a look. While nearly 70% of the entire Bitcoin supply is still technically in profit, look over at the altcoins. Less than 20% are profitable. This just shows you, plain and simple, that while Bitcoin holders are definitely feeling the pressure, altcoin investors are in a completely different universe of pain right now.
But hey, even for Bitcoin, the picture is not all sunshine and roses. Just think about this for a second. Pretty much anyone who bought Bitcoin in the last 5 months is now underwater. They're holding at a loss. And that creates this immense psychological pressure, right? Because these are the holders who are most likely to sell just to cut their losses, which of course just adds even more fuel to the fire.
All right, so we've seen the damage, but what caused it? In this next section, we're going to go under the hood a little bit. We're going to look at the internal mechanics, the dominoes inside the crypto world itself that turned what could have been a downturn into a full-blown crash.
So to really get what happened, you have to know this term, the liquidation cascade. Just imagine a long line of dominoes. A price drop comes along and knocks over the first one. That's a leveraged trader getting automatically sold out. Well, that sale pushes the price down even more, which knocks over the next domino, and the next, all in this rapid, self-reinforcing death spiral.
But here's the thing. This wasn't just about leveraged traders getting wiped out. Something much more fundamental shifted. The market's most hardcore believers, the long-term holders, they started selling. And that is a massive change in market psychology. When the so-called diamond hands start to fold, it signals a really deep loss of conviction across the board.
And the scale of that shift, it's just staggering. In only 30 days, long-term holders moved 815,000 Bitcoin back onto the market. To put that in perspective, this is the largest wave of distribution, of selling, that we've seen since January of 2024. It just flooded an already weak market with new supply at the absolute worst possible moment.
Okay, so with all this forced selling and panicked distribution happening all at once, a really key question comes up. Where exactly was the epicenter of this financial earthquake?
Well, the data is crystal clear. Over 70% of all the liquidations happened on centralized exchanges. These are the household names, the platforms where most people go to trade with leverage. And during this crash, they really became the nexus of all the chaos.
So, let's just compare the two systems when they were put under extreme pressure. While the big centralized exchanges started to buckle, they were facing technical outages that literally locked traders out of their accounts at the worst possible time. The decentralized exchanges, or DEXs, they largely held up. Platforms like Hyperliquid were reporting 100% uptime.
It really highlights a fundamental difference in how their infrastructures are built. But you know, the crypto machine doesn't run in a vacuum. To really get the full picture, we have to zoom out and look at the external forces, the big global events that basically lit the fuse for this entire explosion.
It really was a perfect storm. It all started back in October when the US-China trade war was reignited with this announcement of massive new tariffs. That sent a shockwave of uncertainty through all global markets. As liquidity started to tighten up, investors everywhere just started dumping their riskiest assets. And right now, Bitcoin is trading much more like a high-beta tech stock, not that digital gold or safe haven asset that so many people had hoped for.
Okay, so we've diagnosed the problem from the inside and the outside. Now let's pivot to what really matters for anyone still in the market. Where are the key battlegrounds we need to watch, and what are the strategies for survival?
This slide really just cuts through all the noise and shows you the 4 key zones that analysts are watching like a hawk. The floor, the key support right now, is around $93,600. If that level breaks, look out below, because the next major support cluster is way down between $85,000 and $86,000. Now, to get any kind of positive momentum back, Bitcoin has to first reclaim that 100K ceiling, and then it has to punch through that major resistance around 106K. So how do you even navigate this kind of volatility? Well, active risk management is absolutely essential. Experts are all pointing to 3 basics. First, use stop-loss orders. You have to define your exit before your emotions take over. Second, diversify. Make sure one catastrophic drop in one asset doesn't completely wipe you out. And third, keep your eyes on the big picture, the market sentiment and the macro news that, as we've just seen, can change everything in a heartbeat.
And you know, that brings us to our final and probably most important section. After all this carnage, after all this chaos, what happens next? Are we looking at a little glimmer of hope on the horizon? Or is there just more pain to come?
So check this out. Here's a really fascinating and kind of counterintuitive take from Matt Hugin, who's the CIO at Bitwise. He argues that the biggest risk would have been a massive, frothy, crazy rally into the end of this year. Why? Because historically, that's what leads to a long, painful bear market. He actually believes that this painful washout we're having now is setting the stage for a much stronger and more sustainable recovery in 2026.
And this right here, this illustrates the fundamental shift that could make that future possible. There are really 2 stories playing out right now. On one side, you have the crypto-native retail investors. They're disengaged. They've been beaten down by collapses like FTX and all the meme coin drama. But on the other side, a whole new group of investors, what we call TradFi or traditional finance retail, they're now entering the market for the very first time through regulated things like the new spot ETFs.
And so this leaves us with the ultimate question. We're seeing a changing of the guard, right? Traditional, regulated capital is starting to replace the hype-driven retail money of the past. So will this make the next crypto cycle more stable, more mature, or just different? That is the billion-dollar question that the entire market is now waiting to answer.